Hello traders, welcome back to Your Nifty Guy. I hope all of you are doing well. In trading, the biggest edge we have is not prediction, but preparation. A trader who comes to the market with a clear plan is always in control, no matter how uncertain the day looks. In today's video, I'll share my preparation for Friday's session, the levels I'm watching for, and the exact plan I'll be following. If you find this approach useful, don't forget to like the video, subscribe to the channel if you haven't already, share it with your trading friends, and comment. It helps the channel and keeps me motivated to bring you more every single day. And on that note, we'll start with the video. Today was a wonderful trending day after a long, long time. And since we were prepared, I believe I made full complete use of the price movement that came in today. And I believe some of you, if not all, would also have done it, right? So we'll start with what the market threw at us today versus what we had planned, and then we'll make the plan for Friday session. So tomorrow the markets are closed on account of the Shera as well as Gandhi Jayanti. So we'll be reopening on Friday. So we'll discuss the Friday's market possible scenarios in the second half. First, we'll discuss about what we had planned for today versus what happened in the markets. Now, markets opened flat, which, as per me, was the best opening, as I had also discussed in yesterday's video. All we needed to do was wait for a breakout on either side, either on the upside or on the downside. Now, this was the trend line which was coming in. Markets gave us a good move on the upside, immediately breaking up not only just above the trend line that we had drawn, but also above the swing, recent swing highs that I had marked with the red line. Markets also gave us a good pullback. Now, the first entry scenario would have been around here with stop loss being around here. But I did not enter around here, keeping in mind the RSI. Now, as most of you would be knowing, I am an ardent follower of RSI, and I always have only one indicator on my chart, which has always been there, always plotted is RSI, and I always keep an eye on it, right? So RSI stands like a silent guardian for me, which will help me with taking a lot of trades, also avoiding some trades, right? So we have been focused on RSI divergence, which is the positive divergence near the end, right? Where I told you guys that the market seems to be making a bottom, consolidating before it can move up. And that is exactly what happened. RSI proved itself right. But again, here, when the market was coming in for breaking this particular high, it also breached this high briefly, right? If you look here, the high was 24,694.05. The high in this candle was 24,695.40. So 0.35 points precisely, it breached this particular high. But then look at the RSI, right? Around here, when the high was made, this was the RSI. But around here, when the market was approaching the level again, the RSI was much, much lower, right? That was the reason I did not enter into the trade around here, and I waited for some more confirmation. Markets again gave a small dip and then moved up again around here. Now, if you look at the RSI, right, you have to compare RSI with the last peaks or the last troughs. So around here, this was the RSI level around this particular high. But then as soon as the RSI approached around here, if you look carefully, the high was much higher than the RSI levels was much higher than the previous peak high, right? So that was the reason I decided to enter around here. Now, on the Nifty spot chart, the breakout came in the 11:10 candle AM candle itself, but on the premium chart, on the option chart that I entered into, the breakout actually came in at 11 in the 11:15 in the next following candle. The reason being was that India VIX again today uh, was down by around 7%. And because when the market goes up and there is no fear in the market, basically in layman's term, there is a lot of complexity to the value of VIX and everything. But in layman's term, this is what happens, and because of which the options will lag to a certain extent. So I entered in the 11:15 candle. I entered in the money options for following Tuesday expiry, and this was my entry on in the spot chart, you look at in the 11:10, but in the premium chart, the entry was triggered in the 11:15. You can go back and check the candles for today's premiums. The entry would have been triggered in the following candle, and then again, I this was the exit, the 12:15 candle. Markets gave a very smooth move with very little retracements, but then this candle followed all the three rules that I have for exit in a long trade. The high was lower than previous high, the low was lower than previous low, as well as we got a closing which was below the previous candle's low. So this was my exit. In this particular trade, I captured around 70 odd points. This was a very good trade, very decent trade, gave a lot of momentum in the favor immediately after entering. And as you can see, were able to take this particular trade simply because we were prepared for it, right? We had discussed it yesterday, and our trade plan was very clear. And what happens when you prepare for a trade plan is you are already anticipating something, and if market does that, you take that trade, of course, with fixed stop loss and your risk reward into consideration. And if it does not happen, you do not enter into unnecessary trades and losing your capital unnecessarily, right? So this was the only single trade that I took. It was a beautiful, lovely trade. After the exit around here, markets again came down, consolidated. Once again, it came around breaching of this particular high, but then again, my dear friend RSI showed me a clear negative divergence because of which I did not enter the particular trade. My setup did not allow me. Markets did move eventually higher up. The Had I held on to my position, of course, I would have closed the day with much more profits. But then that is not how it actually works, right? You have to work within a fixed framework of things within. Apart from this particular high, even when the market reached this particular high, there was still a divergence if you compared the previous high, right? So again, that is something which I personally follow. So in case if somebody is not looking at RSI and simply only follows the price action, again, this would have been a good entry as well with a good, nice red pullback candle just before the breakout happening. And that is something which could have been taken into consideration. But because I follow RSI very religiously, it's been the only indicator which is there on my chart. So I did not enter into, and this was not just the uh, divergence was not simply spotted in the 5 minutes chart, but if you look at it on a 15 minutes time frame as well, markets made a new high. RSI did not breach the previous high. So again, the divergence is there. Of course, divergences will come in once market moves in a parabolic manner, which it did today. But nonetheless, good trade after a lot of days. And that is what I always tell you guys, not to rush into unnecessary trading if things are not happening as per your plan, as per your setup, but to wait for the markets to actually react as per what you are planning or as per what is being planned by you. So this was the good, simple single trade. Now, markets moved a lot today, right? If you take the bottom till the very high, markets moved 265 points, right? I captured in terms of premium points that I captured roughly around 72 points. Now, markets is moving 265 points and you are capturing 75 points. Is that good enough? Absolutely good enough. Never ever there will be anybody who can claim that they have captured the entire move until unless, of course, you have taken an entry at day's low and then you fainted, only to wake up at the end of the day and you would have been in good profits again. But that is something which rarely happens, and that is something which I am strictly against. So you should always follow all your rules as per your setup. Entries, exit, trailing, everything has to be there in sync, in perfection. Only then will you be able to make it big in the world of trading. So I hope the trade plan that we discussed yesterday and how it unfolded in the live markets today is clear to everybody. In case of any doubts, put it down in the comments and I'll be happy to answer them. Now, for Friday, number one thing, today was a very good trending day. Friday, don't expect the markets to be again trending. It can be trending, but then usually what market does is it moves in phases, right? Around here, the volatility was contracting, expansion. That is how market moves. And so it can again move up as well, right? There is no, uh, I I do not predict anything, like I always say. We should not predict anything. But then again, because after a good following, good trending day, most the chances would be of a sideways day, right? On a daily time frame, if we see, so the candle that is formed is a reversal candle. Now, why do we call it a reversal candle? Is the low of the candle is higher than previous low. The high of the candle is higher than previous candle's high. The closing is above the previous candle's high, right? That is why I call this particular candle as a reversal candle. Now my bias will be more on the bullish side. Now we have seen this around 9 days of continuous selling in Nifty. Today was the first pullback. Do we buy into the first pullback? Absolutely not. If I talk about Nifty on a daily time frame, this should be our plan. And this is what I want you guys to be looking at in Nifty from Friday onwards. So this is the first pullback that we have got. Now what we want is a market to create a dip with a higher low. And then once it breaches, this will be a temporary bottom for us. This will be a good double bottom breakout on a daily time frame, and that is something that we can trade. But for now, we'll keep the trading strictly on an intraday basis, and that is what we'll be planning. Now, okay, again, I'll also quickly address the RSI, 4-hour RSI. So this is, see, markets were swiftly moving into a downwards move. Now, this is the first swing that we have got, right? If we look at RSI from around here till the spot. Now, if market gives us a lower low around here, right? Market goes down below this low, but RSI does not go below this low. RSI maybe reaches around this point. And then if we reverse, that is a positive divergence on a 4-hour time frame. And that is how we need to look at divergences on any time frame, right? We need proper swings. Around here, markets did not give us any swing. Now, this is the first swing which has come in. And if we get a, say for example, this low is broken down, and then on RSI, the low does not get broken down. That is what is a positive divergence on a 4-hour time frame. Now, rest of the time frames are again right now. We can see the structure change. So around here, it was completely lower, high, lower, low, lower, high, lower, low. Around here, we have seen the structure to change. For Friday, I will keep the plan of action again, will be very, very simple. Number one thing, of course, we are now biased towards the long side. So any trade which comes in with above the day's high, we can create a long entry again with a pullback. Now, there are certain pullbacks around here, but then for the sake of safety, I will take today's entire range and will mark the 0.5 to 0.618 zone. Right. Below this is where only I will be looking at a short entry. If market opens with a gap down, and then if we see some buying around these levels, this is where I will be looking at a long entry. Right? I hope the points are clear. Now, one more trade that can happen at the opening is this. If we get a flattish opening and then we go and we give a closing above today's high, and then the low of that particular candle gets taken out. This is the rare trade that I keep talking about. I do not know when Nifty will give me a live example of it by actually the trade happening in the live markets. But then again, nonetheless, it can happen because there would have been a lot of people who would have missed this entire move, and they will be in a lot of FOMO. And when the market moves up, that is something where they will be trying to participate in the longs. And if it's a trap and markets again move back below this, all the stop losses will be triggered. It will also form a double top around here, and we can look for a short trade. And once we are in this trade, again, our initial targets will be around this swing low or around these levels, wherever we will be trailing the entry, right? It will be a quick trade, quick entry, quick exit. So do not hold on to this trade for very, very long because right now our biasness is on the long side and we are short only below this particular swing, right? Or this particular level. So yeah, that wraps up my preparation for Friday's market. Remember, the market will always be uncertain, but your job as a trader is to reduce that uncertainty by coming in prepared. Don't react randomly, react with a plan. If you found this video helpful, hit the like button, subscribe to Your Nifty Guy, and share it with fellow traders. And as always, drop your thoughts in the comments. I would love to know how you are preparing for Friday. Till then, trade smart, trade stay safe, stay disciplined. Cheers, guys.